You bought your home. You locked in that low 3%, maybe 4% interest rate. You paid every bill on time. You followed the rules. But I'm here to tell you, your mortgage is not safe. For millions of middle-class Americans, the dream of home ownership, the ultimate symbol of stability, is quietly being sabotaged. Inflation didn't just raise the price of groceries. It has fundamentally moved the financial goalposts, and the system is actively working to bankrupt the responsible homeowner. Foreclosure activity is now rising for the 8th month straight. But this isn't 2008. People are not losing their homes because they skipped their payment. They are losing their homes because of a silent killer hiding in their bank statement. A killer they can't negotiate with, they can't refinance, and they can't budget for. I'm talking about the P.I.T.I. trap. P.I.T.I. is the 4 letters that define your mortgage: principal, interest, taxes, and insurance. You fixed your principal and interest. That part is safe. The crisis is in the other 2 letters, the ones your bank controls. I will show you the exact moment on your monthly bill where your locked-in 4% mortgage suddenly becomes a hidden 8% payment. A hidden, mandatory fee that is legally allowed to spike until you default. That is the crucial reveal. That is the hidden truth nobody in the mainstream news is telling you. Today we expose who set this trap. We break down the 3 mandatory costs, the specific line items that are guaranteed to kill your budget this winter. And most importantly, I'm giving you the only strategy smart homeowners are using right now to fight back and stop their hard-won equity from being stolen. This isn't just about money. This is about stability. This is about the betrayal of the American dream. Welcome back to the channel. This is Nation House Discovery, where we expose the hidden financial traps aimed at the middle class. And to understand how this trap works, you first need to understand the true cost of taxes and insurance right now. I want you to forget what the news tells you about lazy borrowers. The fact is, foreclosure filings, specifically completed foreclosures, are surging, up over 32% year over year. These are not subprime victims from 2008. These are people with jobs, with 401ks, people who did everything right, and they're still losing their homes. The blame is being pivoted away from the systemic crisis and onto the individual homeowner. That is the outrage. I want you to imagine a letter arriving on your kitchen table, a certified envelope from your mortgage servicer. It's the dreaded Escrow Shortage Notice. It tells you your monthly payment is going up, maybe by $300, maybe by $500, maybe more. Not because your 30-year rate changed, not because you spent too much, but because your mandatory fees exploded. That is the new, terrifying reality for the American middle class. Your home is not just an asset. It is your entire family's security. It is the core of your generational wealth. It is the one thing that was supposed to protect you from the insanity of the rental market. Losing it means losing everything. Not just money, but stability, dignity, and the future you planned for your kids. For the middle class, especially Black middle-class families who have historically had to fight harder for every dollar of equity, this fear is compounded by historical trauma. The last crisis stripped wealth away. This crisis is just as dangerous because it's a silent thief hiding behind bureaucratic language. When that escrow shortage hits, it pushes you straight over the financial cliff. You are faced with an impossible choice: drain your savings to cover the sudden mandatory spike, or risk default. The moment you realize your home is no longer a sanctuary, but a liability whose costs are controlled by unseen forces, that is the moment the pit trap closes. But how did those 2 costs, taxes and insurance, become the new mortgage killer? To answer that, we have to expose the hidden truth about where your money is actually going.
So how did those two costs, taxes and insurance, become the new mortgage killer? Let's expose the hidden truth hiding in plain sight, the PITI trap. PITI stands for principal, interest, taxes, and insurance. It is the real cost of your home, and right now it is a four-letter financial time bomb. Here's the breakdown. The part of your mortgage that the bank spends 90% of the time talking about, principal and interest, is the part that is fixed. You locked in your rate years ago. That part is safe. But taxes and insurance, the T and the I, they are variable and completely out of your control. They are the Trojan horse of your monthly payment. Inflation didn't just raise the cost of milk or gas, it raised the cost of mandatory property survival. Look at property taxes first. Your county government assesses the value of your home, usually based on comparable sales in the area. And guess what the housing market did for 2 years? It skyrocketed. Those wildly inflated home values of 2022 and 2023 are now turning into wildly inflated tax assessments hitting your mailbox today. The government is collecting a massive windfall, and you, the homeowner, are stuck paying the difference. Then you have home insurance. This is the truly terrifying part. Due to the increasing severity of the climate crisis, insurer losses are through the roof. This is not anecdotal. Data confirms that average home insurance costs are up 40% in just the last few years, especially in coastal or fire-prone states. In some regions like Florida and California, major insurance companies are literally fleeing the state, refusing to write new policies. They are abandoning the homeowner. This forces people into desperate, high-cost, state-run insurance pools. The banks and the system are hiding the true risk here. They focus on the principal and interest, the part that looks safe, while silently letting the taxes and insurance become your second, hidden mortgage payment. You thought you had a $1,500 monthly payment? Now your T&I have ballooned to another $1,500. Your mortgage cost just doubled without you signing a single paper. Damn, nobody told us this. And that spike, that sudden non-negotiable surge in T&I, is what creates the escrow shortage that sends people into foreclosure. It's the moment the cost of surviving in your home exceeds your budget's ability to breathe. But the question is, who is really benefiting from this squeeze, and how exactly does this hidden tax become the ultimate threat to your savings and job stability? Let's dive into the grim math of the wallet impact. This is where the financial betrayal becomes personal. Let's look at the numbers for a typical middle-class homeowner. You locked in your mortgage, right? Let's say your stable principal and interest is $2,000 a month. That felt safe, that felt budgetable. But due to the PITI trap, the exploding taxes and insurance, your T&I costs have ballooned to $1,500 a month. Suddenly, your effective monthly housing cost is $3,500. That is an impossible jump. That is a $1,500 increase forced upon you, not by choice, but by inflation you can't control and assessments you can't easily fight. For the middle class, this destroys all your buffer. This is a 5-alarm financial fire. That extra $1,500 has to come from somewhere. It comes from your emergency savings. It comes from the college fund. It comes from maxing out credit cards just to buy groceries. When your core housing cost spikes like that, the middle class has zero buffer. Your entire financial security is wiped out. You're immediately thrown into the most dangerous financial position, living paycheck to paycheck, even with a 6-figure income. And here is the ultimate fear. One illness, one major car repair, or one unexpected job loss guarantees default. The system tightens the financial rope, waits for one mistake, and then they come for the home. Foreclosure is the homeowner's eviction. You fought for 10 years, 20 years to build equity, to build something for your family, only to have the system quietly eroded with a paper cut from your county tax office or an insurance premium hike you couldn't dodge. That
is the hidden cruelty of the PITI trap. It doesn't target the reckless, it targets the responsible middle class who had their eyes on the P&I and were blind to the exploding T&I. It feels like a theft. You aren't defaulting on your debt, you're being defaulted on by uncontrollable, mandatory costs. But while the middle class faces this slow, terrifying drain, a specific group of players is waiting to pounce. They are the winners in this crisis. They are the vultures benefiting directly from your insecurity. We need to look at exactly who is profiting from this silent destruction and who is suffering the most.
This is the morality question at the heart of the PITI trap. Who wins when you lose your home? Let's start with the most morally gray winner of all, your local government. They are the silent beneficiary of your anxiety. They are not waiting for a massive bailout, they are collecting their money right now. When housing prices skyrocketed, your city and county governments saw their property tax rolls swell. They benefited instantly from those wildly inflated home value assessments. They are watching your property tax bills spike, securing their massive budget increase for next year, completely detached from the pain it is causing your family. They are the ones raising your mandatory cost of living without a single public vote. That is the outrage. And then you have mass investors in Wall Street. Do you think they are worried about rising foreclosures? No. They are celebrating. They are circling. They are waiting for the exact moment the middle class can no longer afford the PITI trap. They are waiting for the new wave of REOs, real estate-owned properties, to hit the market. They want to swoop in, snatch up those homes at a steep discount, and then turn them into high-priced rental assets. The irony is cruel. The same crisis that forces you to sell is the opportunity that allows them to consolidate housing wealth even further. They are capitalizing directly on your financial collapse. Now for the losers. It is, first and foremost, the middle-class family. They don't just lose an asset, they lose the foundation of their life. They lose the principal they fought to pay down. They lose the only generational wealth they had. And the next loser? The next generation. Foreclosures flood the market with depressed, destabilized inventory. This hurts neighborhood stability, drives down property values for nearby safe homes, and ultimately pushes the next wave of young people even further into that impossible rental market we talked about. The dream of homeownership becomes a punchline. This crisis doesn't just damage one family, it poisons the financial stability of the entire block. It creates a domino effect. We have a powerful mechanism of destruction, the PITI trap, and a clear winner and a clear victim. But to truly understand the danger, we need to dive into the most anxiety-inducing part of your mortgage statement, the one document that delivers the final crushing blow. We need to talk about the terrifying moment your escrow account hits zero and the betrayal that follows.
Here's the tension build. You are paying your mortgage every month, right? But the portion for your taxes and insurance, the T&I, is sitting in a side account called escrow. It's your money, supposedly safe, waiting for the bills. But because those T&I costs exploded this year, your escrow account is now dangerously empty. It's in the red. And that triggers the dreaded, stomach-dropping document, the Escrow Shortage Notice. This notice is the moment of maximum pressure. Your bank sends you a letter that says, due to rising insurance and taxes, your escrow account is $6,000 short. You have 30 days to pay this $6,000 immediately, or we will permanently raise your monthly mortgage payment by $500. That's the WTF moment. You were being penalized for inflation that they didn't properly account for. You were being asked to solve a systemic problem with your personal savings. It's a financial ransom. And that new, permanently higher payment, that $500 spike, is what finally pushes that middle-class family over the financial cliff and into foreclosure. And for those of you in states like Florida or parts of Texas, the betrayal is even deeper. It's a direct legal shock. The insurance companies themselves are refusing to insure homes. They are literally leaving the market. They are abandoning the homeowner. This isn't just a cost increase, it's a total withdrawal of coverage. This forces desperate families into costly state-mandated insurance pools, the absolute last resort. You are suddenly uninsured or your coverage is 3 times the price it was last year. Your home is suddenly uninsurable. That is a direct line to default. This is the ultimate betrayal of the American dream, and for the black middle-class community, this triggers profound historical trauma. The last crisis was predatory loans designed to explode your interest rate. This crisis is predatory costs designed to explode your mandatory expenses. The outcome is tragically the same. The quiet, devastating erosion of hard-won black generational wealth. A crisis of costs is just as destructive as a crisis of debt. This threat is real, it's escalating, and it's happening right now. And if you don't take action, you risk being blindsided by the next wave of this PITI squeeze. So what happens if you do absolutely nothing? What happens if you ignore that escrow shortage notice? We're going to look at the urgent risks facing you this winter and the strategy to fight back.
Here is the most critical warning I can give you right now. The worst of the PITI trap is not here yet. It's coming. Think about how property taxes work. They don't update instantly. They lag behind the market. The property tax bills being sent out today are often based on home values assessed last year. This means the absolute worst of the tax increases, the ones based on the peak, wildly inflated home values of 2024 and 2025, are still in the pipeline. The PITI trap is set to explode next year. This is the policy danger. The middle class is being hit by the initial shockwave of insurance spikes now, and they will be hit by the full force of delayed tax spikes next year. It's a 2-stage financial knockout. And the cost of being clueless right now is your entire financial future. If you stay clueless, if you wait for that second, unavoidable escrow shortage letter to land on your kitchen table, you completely lose your ability to strategize. You lose the time you need to file a proper property tax appeal. You lose the time you need to shop for a new insurance broker. The cost of delaying action is potentially losing your home and your dignity. You transition from a homeowner with options to a victim on a bank's timeline. But there's a final terrifying scarcity trap if you try to escape the PITI squeeze by selling your home. If you decide the costs are too high and you need to list your home, who are you competing against? You're competing against the 32% spike in foreclosures that we started this video with. That is distressed inventory. That is motivated sellers backed by banks who need to offload assets quickly. When you list your home, you are competing directly with a flood of desperate, cheap inventory. That will drive your potential sale price down, stealing your equity and eliminating your profit. You escape the PITI trap only to fall into the selling trap. The time to protect yourself is not next year. It is not next month. It is right now. There is only one strategy that can help you fight back against the PITI trap. Stop your equity from being stolen and survive the coming storm. It's the strategy that nobody is talking about because it doesn't benefit the banks or the local government. I call it the PITI audit. This is your relief after pressure. This is your survival guide. The goal is to aggressively attack the 2 most dangerous letters in PITI, the T for taxes and the I for insurance. First, the taxes. Your local government is currently using inflated, peak market values to assess your home. They are counting on you being too overwhelmed or too confused to challenge it. Don't be that victim. You have the right to file a property tax appeal. Your strategy should be to specifically cite the current market softness, the cooling sales, the increasing days on market, and yes, the rising foreclosures, as evidence that their assessment is artificially high. This is the only leverage you have against their silent cost increase. Second, the insurance. Stop relying on the expensive default insurance option your mortgage lender shoves in your face. That option is rarely the best deal. The non-obvious, actionable step here is to find a reputable, local, independent insurance broker, not a captive agent who only sells one company, but a broker who can shop 20 or 30 different, smaller insurance companies that specialize in non-standard or high-risk areas. They can often find you coverage your big lender didn't even know existed, potentially slashing that cost by hundreds a month. But before you do anything, you need to know exactly what you're fighting. Grab your latest mortgage statement, look past the principal and interest columns, and find the escrow breakdown section. Look at the ratio. If your taxes and insurance make up more than 40% of your total monthly payment, you are in the immediate danger zone. That is the number that should terrify you, and that is the number you need to fight.
The P.I.T.I. trap is designed to steal that control. But now that you know the trap, you have a choice. The system is counting on your silence. The banks are counting on your confusion. The government is counting on your complacency. But you made it to the end of this video. You now know the taxes and insurance are the two hidden killers in your mortgage. You have the tools to launch your P.I.T.I. audit and fight back. You now have control. I just showed you the P.I.T.I. trap, the quiet killer of the American dream. Now, I want to hear your voice on the injustice. Tell me in the comments, which cost is more unfair? Is it the rising insurance premiums that driven by global forces, climate change, and corporations sling the market? You can't stop a hurricane. Or is it the spiking property taxes, that T, driven by local government spending and outdated inflated home value assessments? You can't vote against every line item. Who is ultimately responsible for stealing middle-class security? The corporation or the capital? Hit the like button if you found value in exposing the P.I.T.I. trap. This is the information the system doesn't want you to share. And if you want to stay ahead of the next wave of this crisis, if you want the next financial truth the mainstream media is hiding, then subscribe right now. Because while this foreclosure crisis is accelerating, there is a whole new layer of hidden risk that homeowners and renters must know about, especially the new legal loopholes Wall Street is using to seize assets that nobody is talking about yet. Don't miss the next move. Get prepared. We'll see you in the next video.